By the end of this video, daily bias will be made easy for you through one candle theory. Buy below the next candle. Let's dive straight into what I mean by this. We ain't wasting any time, let's get into it. Buy below the next candle. What do I mean? When we're in a certain order flow, like in this case we're in bullish order flow, you want to be buying below the previous day low. Okay, so quick example here just to demonstrate what I'm talking about. You can see on one side we came into the mitigation block. So we have obviously a market maker buy model, original consolidation, distribution, redistribution, smart money reversal, low risk buy, accumulation, reaccumulation, then we run the high out. Okay, so inside here, what do I mean by buy below the next candle? Well, you want to be buying below the previous day low. You can see we came in here mitigating an area of mitigation, and that's not just a buzzword. Mitigation is people offside getting back onside with the market. People, when I say people, I'm referring to smart money. Okay, so anyway, let's look inside this. We have a PD array just above this mitigation area. Okay, there's also this up close candle, which is more mitigation, and you can see that touches it to the pip. This is a rebalance redelivered. We deliver buy side, delivered sell side, and then traded through and delivered buy side again. So this area here, we remove the box, is a PD array. It is a redelivered rebalanced. Okay, so once we trade back down into here and we take out a previous day low, we are now looking for buys, because remember I said we want to buy below the candle. Okay, buy below the previous candle. The previous candle being the previous day low. If you drop into the hourly chart, you can see the previous day low gets raided and then we rally. So we have a higher time frame PD array, which is obviously our daily redelivered rebalanced. If I can find it again, let me mark it up. Redelivered rebalanced. Okay, and then we drop to the hourly. We are waiting now for a previous daily low run. So once the previous daily low run is happened, we look for displacement on a lower time frame. And we remember we got our daily bias from order flow 1 to the previous day low in bullish order flow, and obviously previous day high in bearish order flow. And now we are looking for displacement, because naturally once below a previous day low we are in a discount, because below old lows is discounted price. So once we're below the previous day low, we look for displacement. Look at that. Okay, this is displacement, a strong move higher. Notice, for example, here, this move higher is not as, doesn't have as much momentum as this. Okay, that's a big move higher. Displacement is when smart money is active inside the market. Displacement happens because big money is coming inside the market. ICT uses the analogy that if a elephant jumped in a pool, displacement would happen, right? So water would come crashing out. It's the same when a big elephant, being smart money, comes into the market. We get displacement like this. What are you looking for next? A simple fair value gap. Simple fair value gap. And now look, okay, once we trade back into the top end of the fair value gap, look what we run away from, and look where we run to, the high of this fractal. By fractal, so this is your high, this is your buy side liquidity, this is your smart money reversal. This is also a market maker buy model on the lower time frame, but I want to focus obviously on the daily chart, because this is a guide to daily bias. Firstly, outline order flow. Are we respecting down close candles and trading through up close candles? Clearly we are. Okay, down close candle never gets traded through. Up close candles that would be bearish order blocks, but because we have a higher time frame drawing liquidity, which is higher, being this high over here, we are trading through them and disrespecting them, which means order flow is obviously bullish. When we trade back down into a PD array, you were literally looking for a PD array, then you're looking for a previous day low ran. Previous day low run gets ran on Thursday. Now you're looking for reversal plays. Reversal plays over here, you can see on the 15-minute chart even more displacement. All of this is strong displacement during London session. We then mitigate the area, come back down into the area and rally from there. You are buying this because of the narrative that we've ran a previous day low inside of a discount array with bullish order flow. Okay, let's dive onto the daily chart once more and I'll show you more examples of this. So as we continue higher, if we haven't reached our objective yet, being this high over here, if we haven't reached our objective, we are following order flow and looking for that objective to get reached. Until we take out that objective, we are bullish. Until we take out that objective, down close candles should hold for higher prices. You can see inside here, down close candles traded through on this wick. It doesn't have to be on a closing basis. Now, a lot of people say it has to be on a closing basis. That is simply wrong. If you're in the correct order flow with the correct narrative, as soon as price comes above that opening price of the order block and trade back into it, that is a buy, right? Anyway, that gets bought up here. You can see we have another PD array here. It's the same PD array as this. Deliver buy side, sell side, then buy side again. This area becomes redelivered, rebalanced. Once traded back through into this area, and you can see the down close candle here never gets fully disrespected because we trade down and we trade below it, yes, but the wicks don't hold the volume. There are differences in the wicks depending on your broker. We trade through it, and now bullish order flow continues, and obviously we nearly are at the higher time frame objective. I've been calling it in my videos for a while now. You do the same thing here. Look at the previous day low ran. Previous day low ran into a discount level. A discount level, why? Because we are overall bullish, and if you take a swing to a swing, you can see this is discount level. Naturally, also, we are below a previous day low. So below a previous day low is automatically discounted. What are you looking for now? Displacement. Look at this over here. I want to take your attention to this. This is obviously consolidation. We have no displacement inside here, but then we do this. That is what you are waiting for. If I remove this or move it back, you are waiting for that sort of price action. The real momentum, quick, snappy price action where we shoot up. Then, obviously, naturally, displacement does create fair value gaps. So once we have a fair value gap created, and a wide fair value gap, not a small one, but a wide fair value gap, once that's created, you can assume that it's going to get traded back into to mitigate positions and load new orders. You can assume that it's going to get traded back into and then rally from there. And look at the actual momentum in that, okay? We have the down close candle also before the displacement, which gets traded through into the wick of it. You would be buying this up, buying the top of the fair value gap too. As we're digging lower, you can add positions here, stop loss below here, and obviously this is also a fractal market maker buy model. So people ask me all the time, how do I find market maker buy and sell models? Let's say you wanted to find a sell model on the hourly. You would wait for a premium level to be hit on the daily, previous day high taken, and then displacement. Once the displacement happens, we are confirmed to be on the sell side of the curve now. So like in this example, once the displacement happens, we are confirmed to be on the buy side of the curve now. We have a consolidation, return to consolidation, which is distribution, redistribution, smart money reversal, low risk buy, and accumulation, and then we run the highs out. It is not important that you know those levels. You just need to know when we are switching to buy side of the curve. That is what's important here. Now remember, this all came from the idea that we're below a previous day low, which is naturally discounted into a key premium array. Again, multiple examples of this just in one set of bullish order flow. Here, fair value gap, okay? Why are we still bullish? Because this high hasn't been taken out. There is lots of liquidity that needs to get absorbed above here. So every time we reaccumulate, or every time we are looking to reaccumulate, it is inside of PD arrays. This PD array being a fair value gap. If we drop down, remember, the fair value gap is also a previous day low run. So when we trade into this fair value gap, naturally, we are also below a previous day low. So we are discounted. Drop to the 15-minute chart, and you will have a market maker buy model. This one, slightly more choppy. So you could even, I would imagine this is quite clean on the 5-minute chart. Once again, same pattern. Displacement, fair value gap, trade into it. We also spike down, but we already took the high over here. So this displacement here, the fair value gap, coupled with it, you are buying that and then riding it out to the buy side liquidity above this high. All because we are below a previous day low. Remember, this is Monday's low. The low gets raided on Tuesday into this fair value gap. This high to this low is your daily fair value gap. You are obviously now waiting for displacement. Once the displacement happens, you are looking for a fractal market maker buy model. This high to this low, back to the high over here. That is your market maker buy model. Reverse everything I've shown in this video for selling, and you will see exactly what I mean. You can go onto any other chart, look for a fractal market maker sell model, and it will provide the same framework. Above a previous day high, and now you are naturally in a premium. You are naturally premium priced, and you can wait for displacement on that lower time frame. All you need is a higher time frame key level. I've shown you a few examples just in this price leg, this couple weeks of price action, how many examples you can get. A key level, a key level, a key level, a key level, and then we trade higher every single time. All you're waiting for now is that displacement. Okay, so really quickly, I just wanted to teach you an easy way to find daily buyers. If you did enjoy this video and want to learn more from me and become my student, we are closing up new signups for students in the middle of November. So please, if you want to become a student, check out the top link in my description and join my Discord today. I trade daily and weekly. I post my outlooks, and lots of students are making money off that. So if you want to learn and earn, join today. If you want to support me for free, please do like my videos, comment if with any feedback. If you enjoyed the video, please do comment, and subscribe if you're new. As always, turn on post notifications so you never miss a new video. I thank you as always for watching, and I'll catch you guys in the next one.